All right, guys. Today is May 4th, 2024. This is the second episode of Small Caps Trading Podcast. Our first episode was last week. If you haven't checked it out, we kind of went briefly who we are, what is the purpose of this podcast, and we really wanted to put the expectations about how the coming episode is going to be. But we are in the second episode now. Things are live. We're gonna go more deep down this week about the tickers, about the cycle, about the market, and as also the disclaimer, as you guys see, this is just a podcast. We just share our ideas, nothing more. But
Not
yeah, well,
financial advisors.
now financial
Do
advice.
your
Yep.
own research.
Mo, you wanna take it?
Yes, sir. Thank you very much for that introduction. Saturday morning, May 4th, another week in the books. So like Molly said, like we spoke about last time, our best idea so far is just to have we're going to go through the week that's passed. We're going to look at the market cycle. We're going to choose one setup, and we're going to deep dive into that setup for as much as you can deep dive in however many minutes. So that's the idea. So without further ado, um, so without further ado, let's get going. So I think we can sort of start with the market cycle
Yeah,
section and go from there. What do you think?
yeah, we can do that. As far as cycle, I guess if we can do like in a way on the beginning of like this sections, I can share the first, and then you can give the feedback. Okay, you got that part, but that's what I think, and kind of we can move forward like that.
Share the first.
Share the first in a way that like
First
let's say
what?
I think it's a weak cycle. These are my reasons, right? And then if you disagree,
Oh, okay.
then you're like, I guess that will be more
All
like
right.
student mentor wise. Then
Dynamics.
it will be
Yeah. Okay.
dynamics. Yeah.
Okay.
All right, for me, for sure this week was more action. I thought more juices, more like more action, right? Last week was still decent, at least for me. We had more day one gappers this week. Almost every day we had some sort of runner run over 100%. Did some action there. We had first red day. We had the offerings kind of died, but that's my brief take as far as the cycle. It did pick up a little bit more this week. So what do you think?
Okay. So a little bit more nuanced than that. I simply say that the beginning of the week was not very active, and then things substantially started picking up on Wednesday, and so we can take a look from a macro perspective. Maybe now's the time to share. Let me go ahead and share this presentation. Okay, then. So so here we go. So let's talk about the cycle in general. So over here we have a breakdown of the amount of gappers that we had each day. Here we have a breakdown. This is flash research. I'm sure you all know this. So the volume associated with the gappers each day, and then the dollar volume, which I care about most. And we're really going to focus on these three. I don't care too much about this. So this is week by week, right? So the last bar is the last week. And, you can see that, we have a downtick. I want to remind everybody about what the cycle is. There is really two ways to look at the cycle. I think the fundamentally most important way to look at the cycle is in inflows and outflows of cash. And how much money is being put into small caps to be used. That's really the fundamental of it. But the way that we look at it is with the three pillars I spoke about last week in the podcast, which is how many gappers do we have, how much are they gapping, and how well or not well they're holding their gains, right? So that's another way of determining the cycle. But let's take a look at it from Flash Research's perspective, and I put in some filters over here that I think catch the what I think matters, right? As far as minimum percentage, minimum volume, blah blah blah. But in any case, like I said, the beginning of the week was weak. It didn't have a lot, but it picked up. And I want to zoom out for a second before we talk about the this week market cycle. I just want to talk about the year in general. The year is strong. Generally speaking, the year has strong action throughout, but it ebbs and flows and ebbs and flows. In some strong days, weak days, strong days. It just catches its breath, but generally it's strong. And so, we had a few days in the beginning of the week we didn't have much, and then it picked up. And when we look at the week as a whole, you can see less gappers this week, but more volume and more dollar volume. Okay, so that to me, shows that even though the Monday, Tuesday for beginning of the week was sort of slow, as it started picking up, and it started picking up with the strong action on Tuesday with CMTX or TMX or whatever that one was, and some others had the pretender to it, and then the next day, with that aggressive algo on EBS, and of course Friday with all the crazy action on Friday. So technically, you see not a lot of gappers this week, but you see, like I said, the thing that matters most above everything else is how much money is in play over here, right? How much money is in play. And so that's where you see a really big uptick, and that uptick is predominantly from Wednesday, Thursday, Friday, because Monday, Tuesday was sort of slow, and so generally throughout the year the market is strong. The small caps market is strong. It caught its breath a couple days in the beginning of the week, and then jump right back up to activity, and not just any activity, a lot of really, really strong algos, which tells you there's a lot of players. So that's sort of it about the cycle. Any thoughts? Any questions?
No, I agree. I had a question. So for the people who's wondering, they get this app and then gap per volume and the dollar volume. Why? First of all, do you know how, like, why dollar volume is that important? Is that tells you that, okay, this much participants wanted to involve big money, that means big action, bigger players are involving? Like, could you explain that?
Um, I could try. I don't. I okay. What what matters? Like you're trying to gauge market cycle. And again, small cap market cycle. We're very, very specific here, but you're trying to gauge whether which way the wind is blowing, right? You might be a long only trader, and you want to know if this is your market where dips are going to be absorbed because the money is just there to do that, or maybe you're a short seller and you want to avoid that, and you're looking for conditions where stuff is not really there's not the money is not really there behind to hold these, and that's a great simplification, but so that's why I say I could try to answer that question. And that's really the without the money being there, the moves don't happen. Okay, and so it's a little nuanced, and most of us really focus on just how many gappers we have and how much are they gapping, and they don't even pay attention to the third pillar, which is how well or not well it's holding its gains. But the fundamental to it all is how much money is being allocated, and you can pontificate on that. You can say, well, when the big players that uh, don't only play small caps when the conditions are right and stuff, when they show up, man, they're a sponge. They soak a lot of stuff, and so what I mean. But it's that's it in a nutshell.
Yeah, got it. You can move on.
Okay, so that's that. So that's the market cycle.
Sick.
Maybe we should actually add some. So normally by the end of the week, I try to ask myself, what will next week bring, and with the action sort of picking up from midweek to end of the week. my hope and my gut feeling is that we'll have more strength into say the first half of next week, and from there it's anyone's guess. And that's my thought and hope. So I'll thought I'd throw that in there, but other than that, that's it.
Interesting. I thought after that ALR action, like we talk about the shorts one big, and the next day everybody's aggressive, and then we get those multiple legs on SGBX. Things are reclaiming that it happens in BNF. So I thought Monday will be less harder than Friday because of all those shorts did get out and the longs. Like
I
that was
think
my
it.
speculation.
I think it will be less. I think it will be less harder, but that doesn't equate to no action and no strength.
Yeah,
Like
exactly. That was
what you want is action, but without the real follow through.
yeah.
And what I'm saying is, I don't think we'll have no action.
Oh yeah, I agree. I agree.
You know,
Yeah.
but yeah, good nuance there. Good anecdote.
Um,
So I think that wraps up the market cycle. Shall we move on to sort of a review of the week?
yeah, let's do it. Exciting part. Let's get some.
All right, let's do this. So let's start with. So we did have a few day one gappers, and I don't really want to spend a lot of time on them at all. But I'm just going to sort of breeze through them and focus on what I want to spend time on. But if you, I want you to interject whenever
Hmm.
think you should.
Yeah.
So on this guy, we had GMM, the 12 million floater PR. They leveraged NVIDIA to develop an AI platform. Cool. We all know we see this is sort of a repetition in small caps, where small caps figure out what's the hot company of the that's pushing the market. They like the large cap, mega cap company that pushes the market, and they try to attach their wagon to that star in PRs. Right? You've seen it 1,000 times. On lately, it's been a lot of Nvidia. People putting Nvidia in their PRs. Before that, it was whatever else was this is, yeah, at some point it was Tesla, whatever. So we got that, and we got our classic day one gapper. You could see, obviously we're talking about this day here, right? Um, and After that, we had Getter,
Well, that
55
J.
million.
I was gonna say something. I don't think you were done.
Oh
On
yeah,
their
yeah.
on their PR, like I don't know if you're a long trader. If you read the PR, like it was kind of really obvious they were really just using it. It wasn't like actually there were any attachment that like we
They're a
received.
customer.
Yeah, we received this money from Nvidia, or like we have this. They are like you said, like their customer. It was very easy pump. If you're a short seller, that's good. But if you're long, like that's I think also trap for longs too. If you don't do the homework, if you just want the news, oh I have a gap, or let me buy the breakout, and then you can get caught on these
Right.
things. I think
And you
that PR was very the PR was very
It was an obvious nonsense.
yeah.
Sure, fair enough, and yeah, like stop me. Let's go through them if as much as you want. But just for me, day ones are so redundant that I sort of breeze through them. But I know that's the main one that most people play. So feel free to stop me. But
Yeah,
I will
but
be running through the day ones.
yeah, this was
Um,
a for this very
yeah.
GPR.
So Getter, 55 million floater secures $50 million in additional financing, pre-market play, and I'm not stopping on these because every week we're going to do a deep dive on a single setup. Day one gappers will have its day. We'll have
Yeah,
its
yeah, yeah.
podcast. You know what I
Mhm.
mean? Now I want to start. So we saw a couple of day oneers that do what day ones do, and we had our fades on it, and that's great. But I wanted to pay to shine a light on day one gappers that have held their gains. And Steve, for example, I think is an absolute trash. That it's I'm surprised they didn't pipe the shit out of this. I really am. But at the end of the day, like price action is king, right?
Yeah.
So I am from a fundamental perspective. Certainly, I'm bearish on this. I'm not going to touch this though, from because unless there's a particular setup, and the floor on this is small, right? Like the um, PR was full of fluff and all that stuff, but I put both the daily and the 60 minute, and I sort of point out the range where you can see wicks are being bought, wicks are being bought, wicks are being bought, right? So it should fail. There's no fundamental reason why it should succeed. But, a lot of times you have day one gappers, they have the day one gap, and they sort of hold into a range. And I want to go through a few of those and point them out as well, right? So we have CAUD. Let me know if I got to zoom in, for people to be able to know it's, but you can see, it had its day one, and you can see that, the basing spots. It doesn't mean that it's going to go from here. They should fail, but the setup that folks on Twitter are calling liquidity traps are these, right? Really, really strong, really, really big volume. Um, People are playing this like the day one. A lot of people swing the day ones short, and when they don't get their out and they have volume, their sizes are based on the volume on this day, and the volume dries out, but this doesn't go any lower, then you know that's when something like this might happen with OC, right? So we had our day one gap. We actually had another one over here. So this is not the best of examples, but you had your squeeze. It held, and then it double and triple squeezed, and then after it exhausted out on a second and third leg, everybody forgot about it, and back here it goes. So I point all of that out, to point out that not all day one gappers fade, and some of them fade without giving you really a chance, because they consolidate and then fade quietly, but some of them keep going after that consolidation. And so enter AGBA, right? Which is a type of OC. It's a type of, who knows if any of those ones we showed before, and the CAUD might not trigger something like this. I'm not saying they will, but those are the types that do. Um,
Question really quick on Agua. For as far as the volume, so the first squeeze, first day, you see the last time it did parabolic, it did lesser volume than the when it was in play in the first weeks. Yeah, that day. Do you?
you're saying this thing did less volume than this thing?
Yeah, and I was gonna ask like, do you usually want highest volume on the highs, or that doesn't really matter?
Nah, it's random.
Okay.
Um, there'll be different reasons why the volume will be more or less. That's not really the point of importance. The point of importance is that when you have a day one gap, I'll just show it over here. Like when you have a day one gapper and is holding, right? You have a day one gapper and it's holding, then those are the type that may run again and do an even larger run than it did on the day one. And the volume, it's there's reasons why sometimes it'll be more or less. It's not worth going into over here. But in any case, so enter Agba. Agba, it's some $4 billion partnership where they blah 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 blah. It came from like 20 cents. It's trading at upwards of $3, close to four at some point. Is this partnership worth 20x to their equity? No, absolutely not. Not in any no. Um, but we're a bunch of speculators that are moving this together with the people that have an agenda over here, and so we're having a really, 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 really killer move. And so I wanna compare Agba to OC, not from a fundamental perspective, of course, simply from a price action perspective. Once we've had the day one, and then we have the double squeeze on day one, sort of how we did on OC. And it's not exactly the same because OC went one, then went a squeeze, and it didn't really consolidate here for a third squeeze. It just went for the fucking jugular over here and did that on the third day. So whereas here we had our squeeze, our day one gapper, our squeeze, consolidation, third squeeze or third, big day. Day one, squeeze of day one, second squeeze. And so that's really what I'm focused on. I'm focused on, and me and you traded OC. So me and Molly traded OC together over here on these days. These are the days where we showed up and said, "All right, the party is over, but it's still at elevated prices." And so I'm going to wait for some sort of a signal, whatever that signal is. I'm going to find my risk reward, and I'm going to make a bet that this thing happens. Did we, have great entries? Sure. Did we have great exits over here? Absolutely not. It's a work in progress, but to be able to see, but to be able to see these things, you know what I mean, is valuable. And so, going back to AGBA, so now I get really interested in this because what's the expectation here? Is the expectation that we'll have another squeeze out and this goes now from 4 to what? 8, 10, 12? What's the expectation? For real, what's the expectation from here? Right? And they're gonna, the chips will fall on this whole, merger, $4 billion merger, or whatever, and reality is gonna set in. And so that's the idea. Does that mean get short right here, right now? Bet that happens without any signals? Absolutely not. That's where these levels come into play. You can see, again, it's still holding. It's doing the same action that you see here, right? The way it's holding top third of its gains in a consolidation pattern. Same thing that you see here, right? Same thing that you see here. If we go back to AGBA, it's doing the same exact thing. It's still holding, still with the wicks, still with the base. So now we sort of have our levels, and now we could start to zone in on this and say, okay, it's getting really extended. I can have my plans. My plan, and the plans are super simple too. You got your you got your up resistance, your low. You got your channel, right? Support resistance. You say, okay, a break below this either. If I think it's going to fail in one of two ways. Either it's going to just fail, in which case it's going to be hard for you to fight, to chase this down potentially, or this goes up, in which case you can wait for the final squeeze out to happen and then enter. So either way, if it falls below this key level of 310s, which is it was the top of the last squeeze out, now you see it's the base for this current consolidation. So if it fails below this, you can start to look for pops to short against. And if it doesn't do that, if it keeps going, then you just wait for wherever it wants to stop, and then you can short it from there. And if you're going to ask, well, how do you know when it breaks if it's not a fake break? You don't. That's what key levels are for. And if you have a hard, sort of a hard, let's call it, a switch in the tape where, like, because levels. So this is sort of a switch. What do they call? I see call it on Twitter. I think I have a nicer name for this, but like it's at some point the whole vibe of this will change from an uptrend, because you could draw a line over here, you see clear as day the uptrend, right? You put an uptrend level, you see a clear thing. It's trending up. And so the moment where you want to see that shift, where you want to get short, right, and you want to see that shift, so there is sort of the line in the sand for those things. And for me, the line in the sand is sort of the top of this this top over here, which is now the sort of support over here. If I see it fail below it and then it can't breach over it, I'm going to get short real big. But in the same way, if it breaches below it and then comes back over it and reclaims, hands off, because there's the other option. It could still be going up, which is currently what it's trying to do. So that's that. This sort of concludes, this thought that I wanted to portray to you guys, from showing day one gappers their work, to showing day one gappers their hold their gains, to showing what can happen when they do that. That would be OC. To showing you one that's currently doing that, that's in play, that's AGBA. So that sort of, concludes this part. I want to move on to other things that happened this week. Before I do, any questions, thoughts?
No, I was aware of AGBA, but I didn't have AMST in my mind. AMST kind of doing the same, and you kind of treat them not same to the T, but it's very very similar, right? These are same setups. Like you expect similar things from these.
Similar things from what to what? I wasn't sure what you're comparing
AGBA,
with.
AMST, like first squeeze, second squeeze, holding to
Well,
highs. You start waiting for that break.
AMST or OC? Because AMST is this. It hasn't squeezed yet, and it shouldn't, but it's acting like it will, so it might.
Yeah,
What's your
sorry,
what's your comparison?
yeah, I should have clarified. So I meant if AMST does what AGBA did, that will become the new AGBA for you. If
Yeah,
it
any one of those.
okay, okay,
Anyone. All of the day one gappers that are nonsense. Um, the reason why they become squeezers is because they are nonsense, and you have smart, and they are smart shorts that swing them. It will be. It's not a stupid thing to swing AMST short from a fundamental perspective, but it's also a 2 million floater that's an obvious short that's holding lows, a base. So it's exactly the kind to squeeze. But if it
yeah,
does squeeze, it's squeezing because of the squeeze, not because of anything else. And so once those smart shorts are out, they were the bid that caused this. So they are a temporary bid. They will disappear. So I'm happy shorting into temporary bids. Sure.
yeah, got it.
Okay. Any other questions
No,
before?
no,
Okay. So here I put in sort of an intraday of Agba on this day over here. But I don't really want to get into this right now. This podcast is already running long, and we haven't even discussed our deep dive on our setup today. I just wanted to throw MNDR over here because we did talk about it on the last podcast, it being the next liquidation play, and indeed it was the next liquidation play. Again, don't want to discuss China too much, but I do, with MNDR, they did really do a couple of it's next level reverse psychology, where they did the fake liquidation and then the squeeze up, which caused what this did is it did two things. It caused shorts that leaned over here and got screwed to just be like, man, fuck it. I'm just like I don't know how to trade this, and it got longs. Bulled up on this. Hey, they just screwed the shorts. This is going. And then so 2 days later, when they do the same action that they did here, shorts don't want to short this because they're like, well, this just did this, so this is coming right back up. And longs don't want to long it because they longed it here and now it's down here and they just can't anymore. So that is just next level reverse psychology by the people operating this. And I just wanted to we discussed it last week. Here it is. So I just wanted to throw that out there. Anything you want to talk about this before we move on?
no. I think you named perfectly, and like you say, it's China name, and I'm ready to move on to the our
Right on,
setup.
right on, right on. Okay, so now let's start talking about this week in earnest, which started on Wednesday. Because all this stuff was just got a obligatory day ones and all that stuff. But on Wednesday we started seeing some real action, and I wanted to point out the pretender syndrome. And I thought that we had an absolutely incredible example of that on Wednesday. So on Wednesday we had we had two runners, and of course on the I'm talking about CMTX on this day and SYT on this day, same day, right? So CMTX went from around the $1.50 area to about the $6 area, more or less. SYT went from around the $1.50 area to around the $6 area. Exactly, almost exactly the same. Now, let's look at where they are strikingly different. 200 million volume, 12 million volume, right? Great trapping and bid holding, random action. Okay, and so I traded this live with you, and I was like, look, this guy right here, a high IO, catalyst, couple days away, all the reasons why, like when you ask me what do I think, I tell you I don't know, man. Like that's the truth, right? But then when this came up, and this came up later, right? Because this was already flavor of the day from pre-market, had its action in pre-market. Then everyone is already on it. You have your classic, pre-market reclaim right at the morning. One of the biggest indicators, particularly when it happens at this time of the day. One of the most classic indicators for strength, for strong strength coming up.
What time is
Um,
it?
Morning. If something has a really really crazy move in pre-market, and then right at the morning session, the early morning session, it reclaims pre-market highs in a convincing way, you can like that's just watch out. But you have all of that going on, right? And then SYT didn't start its thing, nothing in pre-market at all, and started its thing while CMTX was already working on its next leg over pre-market. So this is the pretender, right? It's the pretender in every way. We're so blessed to have such a it's not always going to be so apples to apples, so one to one, but I mean it came from the exact same price, went to the exact same price, and so the whole point here is that the trader psychology is, oh my God, CMTX is going crazy. What else? What else can I get? And then something comes up that looks exactly the same. Of course, retail long speculators, yeah, you're going to try it. You sort of should. But the thing is, well, I shouldn't say should, but I certainly understand why. But the thing is that when things, when vehicles like this do such incredible moves, it's one thing to be able to do this move. It's another thing to be able to hold those gains. And we talk about rigged tickers, manipulators, all that stuff. What we're really saying is this can't happen organically. You need a invisible hand to be, causing this to happen. And so, when you get a pretender that's doing, the same thing that this is doing, but without the invisible hand there, then it gets like you get a much higher probability that the pretender without the invisible hand present is going to be the fader, whereas the real, the shiny object of the day with the high volume, you know you don't know. Like you need now. Maybe there's other. It gets much more complicated. And so, on this particular day, I don't think I paid. We paid this much mind, and the focus was here for that reason. And I just wanted to point the pretenders and go over them. Any questions? Any thoughts?
No, I think you named perfectly. I think you said it's easy for them to make those up moves, but hold those gains at the highs are really what makes Pretender a good opportunity on the short side. Like there's no invisible hand there, and I think really be able to identify that in real time, seeing the action and say, okay, this is strong, but can it hold here? That really gives a big conviction on the short
Right,
side.
and you know what? Like to call myself out here, I swung this because I was like pretender, like from $3, we still got from $3.50, sort of where I had some covers here end of day, to take some profits, but I was saying from 350 to 150, we still got $2, right? And I swung it, and you can see. It didn't work out. Yeah, I got like a little bit of coverage down here, and it was like 270s on these wicks or something. Yeah. So I got it was it worked okay. It wasn't a home run or anything, but like to avoid taking like big losses here and to still take whatever gains you can, and great. And I try to get more. Good. That's my job. My job is to try to get as much as possible. Didn't work out. Okay. No harm, no foul. Right. Any questions? Should we move? Thoughts? Should we move on?
Now we can move on.
All right. Cool. ALLR. Um, so ALLR was obviously remarkable. ALLR was obviously remarkable. It was. I don't remember if they had an S1, right? They had an S1, and so whenever companies have S1 filed, there's shorts involved. Even before the amendment, before they're sort of prematurely involved because on the whole, if you look at all S1s, not the S1s that get all this volume, all of them, it's the right thing to do. Right thing. Until the underwriters that know how to raise cash from dilutive financing show up to an instrument that you are smartly short, and they give it the old liquidity pump to be able to really raise money at better prices, more money, better liquidity, whatever the game is, right? Or a combination of those two. So ALR had an S1, had shorts in there. ALR is also a known serial diluter, an aggressive serial diluter, and so all the reasons to be correctly short biased on this. But if you're wrong on the time, you're wrong on the time. ALR can squeeze. It does squeeze. I've seen it. And so that's how we got this action here, which was great. It went from $1 to the mid threes. And you know, some people it gave a monster fade. I mean, there's nothing here. There's no consolidation. There's just hitting bids, hitting bids, hitting bids, hitting bids. It's just straight fade. So it was a monster short. It was also a monster short. It was a monster short in its result. It was a monster short in how obvious it was, and it was a monster short in that people know this to be an aggressive serial diluter, and so it was a really, really, really great trade. It was props to you. You nailed it with size and conviction. You showed up, you saw what you needed to see, and you did what a trader should do. You put on size on this because you said, I got conviction, I see the signals, and you put the size at the right places too. At the places that were the safest to do that. After you saw confirmation and all that stuff, and so big props to you, but also in general, from a psychological perspective, from all of the traders. I couldn't hit it. I didn't have the borrows. Right, borrows for me when I looked started at like 20 cent, went up to 40 cent. I was like, yeah, and we had a discussion at here at 9 a.m. I told you, you asked me where's the cover spot? Is it low twos? I said, nah, man, it's low ones.
Yeah, you said low ones, and even though I know that it's so hard to keep all of it, I just cover. I'm I was almost out at 180s, 170s. I was
But that's just because you had the right size. Because you sacked
I
up
was
and
sized,
put the
yeah.
right size, a big size. I mean, so if you have to take some of that size
Yeah.
down into flushes. You know what I mean? But in any case, so the point is that I knew this is a low ones close, and and I was losing my mind that I cannot get a reasonable cover. I wasn't, even though I knew it was a low ones. I wasn't gonna pay 40 for it, 40 cents. I wasn't gonna do that. And I don't remember if this was reg show or not. It might have been reg show, which means I couldn't
It was.
recycle. Yeah, so I couldn't recycle it. So I was like, I'm gonna pay 20, 40 cents, and I can't even recycle this in case I gotta be defensive about my position or something. Man, forget it. No way. So you had two, and I know others had that same problem. I saw on Twitter that a bunch of shorts couldn't,
Yeah.
didn't want to pay up, and so you had two things that happened here. On Wednesday, you had I think this was Thursday. You had a monster short that worked for worked like a charm for whichever short shorted it, and you had a bunch of shorts that couldn't participate, and they wanted to, and they had real they were looking at this. Are you kidding me? Myself included, one of those folks, right? And all of that to bring us into Friday,
Hmm.
right? And so what happened on Friday? On Thursday, we had shorts that just won the farm, right? Won the lottery, and shorts that saw the lottery being won but couldn't participate. So going into Friday morning, you should have known, right, with any little bit of experience in this, you should have known that Friday shorts are going to come big. They're going to come big because they just won big, and some of them didn't but saw others and couldn't win big. So we're all coming in and we want to be big, right? And none of these names showed up right away. Well, the name that showed up right away was either HSDT or HDST. I
Yeah.
don't. and that one had a S1, and it checked all the boxes, right? But it was trading pre-market at a 50% gap, which is just not what you think is gonna, I'm thinking more. I'm thinking it's gonna be a fake. It's gonna be a fake weakness. Then it's gonna blow out all these shorts that are so gung ho from yesterday, and then we'll have a great trade, right? But what happens? The thing goes 50% pre-market,
Yeah.
never even showed up. So more FOMO for the shorts. Are you kidding me? Where's my short? Where's my money? Where's my play? Right? Enter SGBX. SGBX also had an S1 on it, but it's not ready to go, right? They need to amend it still and stuff. And so you take all of that psychology from ALR, from those shorts that made it big to those shorts that couldn't. You know already that Friday morning they're coming to hit something big. Maybe you noticed that HSDT, whatever the ticker is, that and you understood that the miss on that. Maybe you didn't. I know a lot of shorts did notice it because it got an S1. That's what we're looking at. That's what, ALR, I didn't mention it, but for those of you that know that S1, they never used it because they triple ATM, which was incredible. But point is still the same thing. It's a dilutive instrument. It's going to dilute, and so you're left with all this pent up energy, like a horse that's ready for the door to open and they run to the track, right? That's what we were on Friday. And by we, I mean the shorts by and large.
Yeah.
And so we got, and me and you spoke about this in the morning as well, in pre-market, shorts are looking to get blown up on something first before there's going to be a trade because of everything that mentioned. And so we got whatever the fuck, SGBX, right? And then BNF came. Now SGBX was sort of an easier, you know, I want to say it was an easier avoid. Nothing is an easy avoid, but to me, this more of an easier. Everything that I said points to this. So where does BENF come into play here, and why do I have it on the same ticker, right? On the same screenshot. So this would be not a pretender, like SYT was sort of a pretender for CTMX, right? BENF was not a pretender for SGBX, not pretending to be that. It's a sympathy. It's people are seeing something that works. Again, SGBX came from $2. Where did BENF come from? $2, right? Where's the volume though? Like we get 100 million volume on SGBX and 35 million volume or whatever this is on BENF. Which came first? I have these lined up by time of day. 12 here is 12 here too, right? Which one of these came first, right? So, right. So this was sort of momentum off of this, but not in the most obvious pretender way that SYT was, but in a sympathy way, close enough. And you know, while we traded both of these, again, where was my focus on Friday? Overwhelmingly, right here, because I'm looking for the one that has less of the invisible hand that clearly is there on SGBX for the reasons mentioned, that like that one, they might both have great gains, but one of them is going to hold the gains better. Now, I don't think any one of these is going to particularly hold the gains better. SGBX will amend and will price, but nevertheless, that's the psychology going into this. Any questions?
No, no question. I guess we talked that in real time. It was an easy avoid for me to XGBX. Didn't fight with it. BNF, I did fight with it. We were trading real time. I guess the float really. Were they both low float? Yeah, right. No, yeah, they were both low float.
Um, BNF certainly looks like one SGBX. Let me check it out real quick. SGBX. Jesus fucking Christ, bro! It's a million floater. Oh man,
Yeah, BNF million too.
is it? Nice. Well, you know
Yeah,
what? Then I scratch everything I said earlier. It's a pretender, just like SYT was. to CTMX, straight up pretender. Yeah, they're
Yeah,
so similar.
they're very similar.
Yeah, but same thing. The main one with the volume and the invisible hand, the pretender without the volume, without the invisible hands. I traded, my focus was SYT on the day that that one ran, and BNF the day that it ran for the very same reason. Any questions? Any thoughts?
No, no, it's volume. Actually, we were talking about volume real time. I asked, it didn't blow off, and then you said, "Who's gonna blow off?" There's no like,
You're talking about BNF here. So
yes,
right. So you were asking me. Oh shit. Let me put that into focus. So you were asking me. Um, you were asking me. Can't. I don't know how to bring this up so that you see it all. The top was kind of cropped out, but like on BNF, sort of over here, right? Somewhere along this area, you were pointing to the volume blowout, right? Which, if we zoom out, it never traded a lot of volume. We're talking about
yeah.
300,000, 400,000 candles, but you were talking about, oh, it was some volume speed up. Is this a blow off? And I asked you, a blow off of what?
Oh no, no, sorry. I
Because
didn't ask if it was a blow off. I said there is no blow off. Does that
oh, no
concern
blow.
you? Because it
Okay,
didn't blow off. Let's say that huge candle did like 2x of the volume, that huge one. Then I guess I'll be like, oh, that's like, I want to be more sure. That
there's the
kind
blow
of
off signal.
decreased my conviction. That's why I was like, does this still like, there was no blow off? Is this still like a, okay, short? I did short it, but that was like, it didn't look right, I guess. I don't know.
So great question, and let me answer that. And you bring up a great point. So you asked me something about the blow off, and I asked you to blow who off. And as you know, as funny as the silly jokes are coming up in my mind for the words we're saying here are, um, like you were looking for some sort of a blow off candle, which is, I mean, what's a blow off candle? A blow off candle is an exhaustion candle where, one side of the two sides of this directional, like longs or shorts, are getting blown off, right? Like that's a blow off in price action and correlating to a volume candle. But the BENF, it never really trapped shorts. It just went whoop up and then right into this parabolic over here, and then okay, yeah, it kind of halted down, sort of digested a bunch of the sellers, a bunch of the people that were buyers now sold, and now we have to sort of determine what happens next. And I did short it here and here, thinking that we go back down, and I did get stopped out right here. But to the bigger point, there was not enough participation and sophistication in participation for there to be a blow off or another. This whole thing is really just chasers and whatever, and there's no particular rhyme or reason. So for me, that's why I have this next to it, because on both of these instances you can see the looking left clear as day, right? And so for me, and as this started running, like I got my borrows like here. And I remember talking to you guys about this. I looked left. I said, look, guys, 8, 10, and 13. Those are the levels looking left for BENF. So, as it went through right, like butter through the 8, I mentioned that. I said, look, it went through butter through the 8. So 10 and 13, right? And so it was really a simple thing where, okay, this is the sympathy or pretender to this. The volume isn't there. The invisible hand isn't there. What are the looking left levels? I want to get involved. It wasn't like so much of the nuance. I'm looking for this blow off candle, that blow off, whatever. Sure, yeah, we're looking at that stuff. You know what I mean? But the bigger picture in play is the things that I mentioned. And to my credit, yes, I got short here, and I got stopped out here, but I got short everywhere here after that, right? As you know, and so the idea remained intact, right? I mean, you could see it, its 13s were exactly where it exhausted out, and where we got short the second time after the stop out was here and here and here and here and here and here, and here and here, but all, looking at it here. You know what I mean? And the first risk was versus that. But once that was done, and like, because yeah, I covered here, but I still shorted here and here and here and here, and did a bunch of covers here. At this point, the risk wasn't so much against here as those that are looking for technicals and what's your risk. It's cool, it's working. So now let's keep on hitting it, as long as it still shows that it's working. If it shows a reclaim, like over here, for example, I still got short here and here, but if it would have gone here and then faded here and now start to base here, that's when I'll be okay. If something else is happening, let me decrease risk. Maybe I want to get some, you know what I mean? So it's the risk wasn't on the shorts here, the risk was here. On the shorts here, the risk was, is it still working? You know what I mean?
Yeah, I think that's so crucial. I was about to ask that because I don't see you pyramid a lot. Like you usually move at the highs, below VWAP, you take some covers, let the rest ride maybe. You're kind of pyramiding, like short, little bit more, little bit more, little bit more. That's why I was going to ask what you answered, like if it claims it. Yeah, it really makes sense. I think that was really good short. I did short the but super small. I think that kind of took my confidence away after we did reclaim.
It's not a setup that you're very familiar with.
Yeah.
And so that's why, like on ALR, you could have bet the farm and you did, and you should have. And on this, you didn't. It's just we have to get. There's a lot of setups to get to know. With that in mind, I think this podcast is already running very late, or very long, I should say. So let me say this. Let's go through the rest of the week review, and then let's do the deep dive on a single setup, but let's perhaps make that a separate video and release both on the same day, because it's just very long. You know what I mean? Plus, it would be cool to be able to have just one video for the deep dive.
Oh, perfect. Yeah, I think that's a good idea. So do you want to finish and then we will cut it and then start another video?
Yep.
All right, let's finish.
All right, let's do this, man. So running again through the rest of the week. So Mullen was a first red day, and heads up, first red day is the setup that we're going to deep dive on. That's why I sort of left it for last. So we had Mullen, which was a first red day. Mullen is another one of those, hit every bids. It can run, sure, it can multi-day run, but at the end of the day, it's going to hit every bid once the run is over. So classic first red day where we get, the nonstop, strong first red day with some additional highs on the next day, and then, squeeze all the way back down. And I'm going to get, so the way I look at the first red days.
Are we on the deep dive right now? Did we start deep dive?
No, not yet. Not yet. Still going through the.
I was checking because you were saying first red day. I'm like,
no, we'll get to that. But so we had a first red day. Just the week review. Still, we did have this part. And so and this particular one is the reason why I chose the deep dive to be on this. But in any case, we had Mullen, which was a classic first red day, and then we had JAGX, which I thought was going to be a first red day here, but it didn't behave in the way that I like a first red day to behave, and particularly not just any first red day. This has such substantial volume, and it's such a cheap price that when these do first red day, they do volumes that are like, ridiculous, and I didn't see that there. So I still very much think this is a 5-cent stock. But I'm just waiting for, the signal, maybe we still get 40s, 50s. Ideally, we get, 0.4s, 0.5s on this. And so, this had all the potential setups of a first red day, but, it didn't. And anything could happen from here. Maybe it's a slow fade. Maybe it's, a consolidation with another leg, and we finally get those 0.4s, 0.5s. But, this really concludes the week review.
Yeah, JS. I was really looking forward to see, because I haven't really seen, well, I saw in hindsight, but I haven't really seen this cheap, that huge volume first red day. I was gonna really, but it didn't happen. So next time.
next time. Yeah. All right. So good podcast, good review. Now let's cut this and go to the first red day deep dive.
All right.